Hello. Hello and welcome to Wyckoff Training Academy. This presentation has been delayed. So now in the same pitch, I'll be speaking and I'll be speaking slowly, and I'll be giving you all the insights about the system, how the system is made up of, and what all you can expect out of the system. So I merged this two different system into one. So the name of the system is Quadris WTA Wyckoff Training Academy Wyckoff Trading System version 101. So we'll dive into what we have in the system. So first I'll go through the setting tabs, then later on we'll look into application. This first thing refers to, first of all, let's see what we have. We have, once again, let me change the color. First we have signal identification table, which is nothing but this table, which refers to accumulation and distribution. Okay, so which falls under over here, Wyckoff accumulation and distribution. So this is signal identification table for your reference. People who are not aware about that one, they can go with this table, and after that, getting well versed with the concept, they can switch to off this tab, and then they can use it. After that, we have WTA tape reading toolkit. Previously, tape reading toolkit was different. Now I've merged this one into one indicator. So it's entire complete package. It was a set of two indicators, which I merged it into one. So if you click on this one, what you will get, you will get bars and triangles of tape reading. But if you, for initial stages, if you want the table for this one, tape reading toolkit, then you have to check this box stating Quadris WTA Wyckoff tape reading toolkit, tape reading tables. So herein you will get two tables. They are only for reference. Once you are used to all the signals, later on you can uncheck that and just follow the system as a whole. After that, we have Wyckoff accumulation and distribution. This is effort versus result weak bar, effort versus results, strong bar, effort versus result, weak triangle, effort versus result, strong triangle. So this shows you which side has the greater power to move, whether we are uh, in the accumulation or distribution phase, what sort of price action we should expect out of it. It works very well on any time frame. Either you play around with 5 minutes, or either you play around with three 3 hours, 4 hours, 1 hour. Doesn't make any difference. So here, what I do, I only take strong bars and weak triangles. So my intention taking behind this setting is I want to see weak pullbacks in a strong market. Like this was a selling, there was a weak background over here. Then we have strong buying coming into picture. There was a weak bar. So at this particular point, it was decisive that we were going upwards. So this is a very good move on a 1 hour chart. So I'll dive into all in future videos. I'll dive into all these things because I have to cover trade setups. So my preferred way of using this one is I normally use like here. We have buying, buying, buying. No whatsoever selling, no whatsoever selling. Selling came in, but it was absorbed and market went upwards. There was a selling pullback. This one was selling bar. Again, we went upwards. So this selling was absorbed at this particular bar, and this was a bar where I would have initiated a buy position, depending upon my trade setups. So this helps you a lot in detecting the direction of the market. Like for example, on 17th or 18th of Jan, I guess, there was a selling, there was a great sell-off. Then we have took a temporary stint. There was an effort to go first, but resulted in no whatsoever progress. We had a downtrend, a downward movement. Again, market tried to push itself upwards, but this bar was a decisive bar, which showed us that this all this buying was absorbed and got converted into selling, and this entire day was a sell-off day. Good sell-off day. It was a very good sell-off day. So happens. This happens a lot. This happens a lot. So if you follow my this systems, either accumulation distribution or either tape trading toolkit, you'll never be clueless whether the market is going to go upwards or downwards. You will have an upper hand in trading market. This is purely based on Wyckoff. Okay, having said that, these are my settings which I always keep. Effort versus result, strong bar, and effort versus result, weak triangles. So now we come to the main part, which is trade setups. So trade setup one is based on zones. So what this zones does and how to trade. I have taken two things. I did two things. One is one second, please bear with me. I've done two things. One is just give me a minute. So I've done two things. So one is you will get the signal. Second, how to trade based on those signals. Okay, so in the same manner, if your trade setup one is trading based on zones, then you will have a how to trade with those zones. Trade setup two, price line, minor and major price levels. So, and in the last, you will get how to trade price levels. Then trade setup three, dynamic trend line and how to trade dynamic trend line. Then I have added a dynamic stop loss, which can be used with any often. And the last fourth trade setup is market structure. Market structure along with how to trade in market structure. So we'll dive into this one. So now the first trade setup is zone, and now how to trade with zone. We'll take minor price level and major price level. So these minor and major price levels. First of all, we'll see what is minor price level. Then we'll see major price level. I'll come down to 15 minutes. So what I have done, I had based on the setup that you are applying on the chart, I have defined the trade setup into 1, 2, 3, and 4. And what should be the long and short criteria, and what should be your stop loss while placing the trade. So whenever you are using this one, like for example, we have used minor price level. So in minor price level, what should be your trade setup which you should be looking out for? And second thing, what should be your stop loss? And your reward would differ from person to person. Some might, I believe in taking out 1:3, 1:2, 1:4, 1:5 based on my risk. So here it is suggesting trade the first pullback. So what does first pullback means? First pullback means price went upwards, then came back. As soon as it's closed above, this is your stop loss, last swing low, and it has reached up this level. I will have to check whether it is 1:1, 1:2, 1:3, or 1:4. Normally, what I practice is, if I'm getting here, this is my stop. This is what, if I get 1:1, I bring my stop loss to, that is my training part, which in my training, I always train my student based on like one, as soon as your 1:1 is achieved, bring your stop loss to break even. so that at least by that doing so, you will be in a position to book some profit. So having said that, as some of you might be doing training and might be planning to join my training, so this is how is it. What you have to do, you have to trade first pullback. Here you got a first pullback down upwards, first closing candle. This is your stop loss. This is your target. Then after that, this or ideally this, any of this first pullback ideally should be this one. Swing high, swing low, then a close above. Here you would have initiated buy. This is the go. If you are going with the first pullback, when the line starts drawing itself, and either to the either side, either this way or either this way. So by doing so, sometimes I have seen people getting 1:10 also. Here we have achieved 1:6. Sometimes it is 1:6, 1:4, 1:5, 1:2. So my on an average is 1:3. I've seen it giving 1:3. So this is about minor levels. Now I'll get into my major levels. The difference between minor levels and major levels are not frequently drawn and they are not frequent levels. So whenever you get pullbacks, you have to be very careful with this one, because this has high potential of giving you greater rewards. This was your first pullback. Then again after that, second pullback, and after that, no pullback till this point. If you see over here, this is the first pullback, and if you see the rest of the got, I follow whatever the risk is, 6.31. Here I've intentionally mentioned last swing low, because the thing which is coming back towards this point is the swing. We are trading swing. We are not trading horizontal price movement. For safer side, it is always better to keep the recent swing if it is near to you. And if you are considering this swing, then this doesn't make any sense to you. So either ways, you should take this swing. Based on that, you got 1:5.94. This is a very healthy risk to reward. So having said that, this is how this thing will work, and it gives tremendous results in any time frame you trade. My preferred way of trading is major levels, because it gives me a well established level wherein we get high probability. So this is how here it has mentioned long or short. What you have to do, you have to look for first pullback. What would be your stop loss? Latest swing low or swing high. Okay, so zone is not coming up, I guess. Now we'll come down to dynamic trend lines and how to trade dynamic trend lines. So here also in dynamic trend lines, you have to trade based on first pullback. It is as good as same as price level. As soon as the price moves above, like for example, there was a congestion over here. There was a congestion over here. As soon as price breaks out and there is a first pullback, long or short, either ways, trade first pullback and up she went. Same goes here. We are not getting any decent pullback. As soon as the price comes down, it touches this level and closes up below. Place your stop loss above this point, and this is your first pullback trade based on dynamic trend lines. This will give you a very decent trade. Like for example, this was a breakdown, then again it tested. This was a place to short. Place your stop loss above this one, because this goes with the latest swing. This is the latest swing. Now see how much profit it has generated. Our profit are, one second. Our profit levels are realistic. They are not like any random figures. This is your stop. And price went till this point. And this is my exit. As soon as price peers above this one, I'll exit the trade. Again, here also I got a trade. So getting 1:2, 1:3 is not big deal on an average. Like for example, the same trade, in the same day, there was a breakout, pullback. If I consider, it is 1:1.5. So on an average, I always used to look for 1:3, which is easily achievable. After this, we have another concept, that is dynamic stop loss. These are all staircasing lines which act as a dynamic support and dynamic stop loss levels. They are especially meant for people who are willing to trail the stop loss. I've seen many people applying same thing with this one. First pullback, last swing low, long or short trade. Though I don't consider it to be trading, because I consider it to rather stop loss. So, and a trend identification tool. So if you want, you can use, like for example, this price went below this level, but it haven't turned into red. So, and we got this much of opportunity. So this is a stop loss tool. As soon as you are up in the market, as soon as this price cuts through it, then you should exit out of the trade. Now, the final thing which is there, market structure. And how to trade based on market structure. Market structure is nothing but support, resistance, support, resistance, support. So based on Wyckoff, we look for spring opportunity on support and upthrust opportunity. This is not a quite upthrust, but for sake of explanation, I'm taking this example. This is an upthrust. It's more towards false breakout, and then it's not a upthrust, proper upthrust. Rather, this can be. This is also not upthrust. So, taking out springs. If spring fails, then we take test of breakdown. So I'll explain you in bit detail. Like for example here, this was a level, we have up thrust. Again we have this is level, breakout, test of the breakout. Here you have to use, what you have to use over here? Either you use strong and weak for understanding which side the market was planning to head actually. This will, you don't need this for longer time. That's the reason I have given one tab over here. After everything I have given one tab. This will remove this thing. Till the time you are in not well versed with this thing, it will act as an cheat code for you. Breakout, test of the breakout, buy here, stop loss underneath, first target, and then if you follow the trailing stop loss, like for example, I'll put the trailing stop loss over here. Dynamic stop loss. Here I have initiated the trade. This was a level where I would have exited because price is piercing through the stop loss line. Even based on the, if I would have considered this green being a strong uptrend, then I would have exited over here. So it's a very high rewarding trading system, especially designed for traders who are struggling with trading day in and day out. After that, based on market structure, as I was talking about, you have 4 options to trade. Sorry if I'm speaking slowly. The reason behind is there are other people from other places, so they are not well versed with English, so they are using translators to get the things clear to them. So if not this one, accumulation and effort, what's the result? Now we have seen spring, now we'll see up thrust, spring and a test of a breakout. Here, this is a resistance, here was a support, we got a spring, test of the spring, again we went upwards, it is an thrust, we shorted over here, this is your stop loss for up thrust, and again we got testing because this is the spring, then this is a testing, then again it is a testing, but later on as we extend the line, we got a good and excellent test of a breakout. If we consider this 2 trades, let us check how much profit would this have made? Yes. Again, it is around 1:3, I guess. And if you consider the short selling trade from this particular point, my stop loss is about this point, and I'm expecting at least this level. It is 6.31. 1:6.31. So one of my student, he asked me, sir, what is the win rate? So buddy, you can see the win rate. On an average, we make 1:3, 1:4. Either ways, whatever thing you're using doesn't matter. Like for example, this was a trade. This is today's market. We were anticipating a spring, but spring doesn't happen over here. We had two upthrust, one upthrust, and once my bite, second upthrust over here. So it is simple. What do you have to trade? I'm just giving a brief idea about this one. Hope you people might have enjoyed this video, and I'm keeping this open for all. I got many requests from people stating, "Sir, we have just come across with your system. Give us some time so that we can avail your system. It is quite economical, and if you wish, you can go for it. It's complete trading system with multiple options to play around, and Wyckoff being the main background behind the working of this trading system. So if anyone wants this trading system, please do get in touch with me. I'll write down my WhatsApp number. This is my WhatsApp number, and you have my Telegram ID with you all. So if you have any question, if you want any analysis from my side, please ask your questions in the comment box. That's it. Good night and have a lovely evening. And looking forward to joining this session. The plus point which you all would be getting, one who opt for this message indicator system will get lifetime support. They are non-repaint and special access to my forex group, wherein I share my trades on a regular basis. Thanks a lot. Thanks for being a lovely audience. Bye bye.